these aren't permanent residents in crypto land. This is more hot money flows, tourism flows, hot money flows, direct investment, foreign direct investment, that's VC flows. I do think of it as an economy, and this just allows trade. Most of the ETF providers have made it pretty clear that it's a volatile asset. So I'm thinking of this cycle as maybe the everything everywhere all at once cycle, when people have different unlocks for NFTs or inscriptions, or different unlocks for smart contracts and some of the other things, and they can use it for everything from whether it's ticketing to real world assets. Bitcoin's now become financialized.
Raoul starts by dropping some interesting info. The folks in crypto right now aren't sticking around. They're more like visitors, here for a good time with quick cash. A financial world where ETFs, smart contracts, and NFTs are all happening at the same time, creating a big cycle of excitement. Think of it like a live trade deal between regular money and the crypto gang. The chat dives into turning Bitcoin into a diverse asset class. It's not just about numbers, it's about how we can use blockchain tech in the real world. Grab your coffee as we keep chatting with Raoul Pal.
Brought forward a lot of demand. Net, what will we brought forward? $2-3 billion of demand? Okay, so that takes time for the market to digest. And then you got to think through who the RIAs are, who these people are. And if you put them in your head, these are not New York dealing rooms who are getting on the phone and say, buy this now. They're people who are wearing slacks, who read Barron's on the weekend, read about the ETF, aren't sure, go on the golf course, see their best client. He asks them a question. The whole process is slow. They got to go and have steak dinners and all of that stuff. So the whole process of bringing people in is going to take a while longer, but it's there now. I just think of this ETF as a trade deal between fiat world and crypto land. And so now capital can flow in much easier than it used to. I kind of think of this as a mental model as like China entering the WTO, when everybody can invest in China. That's what this is. Now, these aren't permanent residents in crypto land. This is more hot money flows, tourism flows, hot money flows, direct investment, foreign direct investment, that's VC flows. And then we've got a bunch of residents there, people who have wallets and all of that. So I do think of it as an economy, and this just allows trade. If you think about the biggest buyers of this stuff is actually the millennial cohort. What the millennials do really well is they invest in their 401ks every month. And they can put this in their 401ks. So that's sticky. That's why ARK didn't get all the redemptions when it went down 75%. It's because it's millennials who own it, and they put in their 401k and they're in it for the long ride. So I think it's the boomer crowd who'll be more concerned about the volatility. I think that's a very good thing. There's going to be a lot of people putting it as a long-term asset, buy and hold, and that should give it the stability that you need, that you don't just get massive washouts from people panicking the moment it goes down. And I think most of the ETF providers have made it pretty clear that it's a volatile asset and it's the buy and hold asset. I think as assets mature, they become less volatile. So I think we need to expect that. And particularly from passive flows of 401k investors putting it in every 2 weeks, every month, that'll keep a bid that didn't exist before. Think about the crowd that got financialized in 2020. Again, mainly the millennial crowd, right? There's 110 million Coinbase accounts. And when I checked 6 months ago, only 9 million were active. So speaking to the guys at Coinbase, they're like, yeah, in normal activity, it'll get to 35, 40 million and the top will grow as well. So there's a lot of money still to come in of people who participated last time around, have that interest, still have PTSD, will come back in. So maybe that offsets it. I don't know. I also have a feeling the applications layer of blockchain is going to bring in a lot more use case.
This time, we're diving deep into the demand party in the crypto world. Raoul talks about how new folks are joining, and it's not just techies. We're talking about people in suits having steak dinners. Imagine a slow-cooked stew of demand, taking its sweet time to spread in the crypto world. Raoul compares ETFs to the international deals that brought China into the WTO. It's a slow process, but it has a big impact. He talks about millennials, the group that adds stability with steady, long-term investments. It's not just a quick boom. It's not making a strong crypto world that lasts. Raoul paints a clear picture of how things are changing, predicting more money coming in and showing how millennials can make a lasting mark in crypto. As we ride the waves of demand, Raoul gives us insights into the 2020 financialization wave and how it's still shaping the crypto world.
So I think, yes, we'll probably see lower volatility, but we'll also be feeding capital into crypto land, and crypto land's not just the state of Bitcoin, it's a whole bunch of other places that are going to see capital flows. Everybody's got PTSD because of last time, right? That second run-up after the big correction, the second run-up, everybody thought it was going to extend further, and it didn't. And so everyone's got PTSD. So how I'm thinking about it, I'm giving a 60% probability this is a relatively normal cycle, in which case it would get to 150,000, let's say. I'm giving a 20% chance that it's actually a front-loaded cycle because of the ETF and other stuff, that maybe it gets to that 150 faster and then fades, which will be kind of pain for a lot of people who expect it to go to 2025, right? And then the other 20% chance, I think, is that this ends up being a bubble cycle. And so it looks more like 2011, 12, 13 than it does the previous one. And in which case, if you remember that cycle, it had a interim top correction. Everyone thought it was over, and then it just exploded again. I think there's a decent chance of that, but we need to see the contextualization of how the ETF flows impact, what's happening with monetary policy, what's going on in the economy, how the election's going to play into this. So that's how I'm thinking of it. That upside crazy bubble target, using that kind of everything code structure that I've talked about in the past, we get price targets of 500,000 plus. So even if I discount me for being a moron by 50%, you still get 250 grand. So that's kind of the spread to me, 150, 250. But obviously, who the hell knows? And as you know, the worst thing for any of us is everybody wants price targets, and then a year and a half's time they hate you for it because you weren't exactly right. So I'm thinking of this cycle as maybe the everything everywhere all at one cycle, when people have different unlocks for NFTs or inscriptions, or different unlocks for smart contracts and some of the other things, and they can use it for everything from whether it's ticketing to real world assets. So it just depends how far that applications layer goes. If the applications layer doesn't make much progress this cycle, then you're dead right. We'll see rebalancing. Don't forget, they're also going to be issuing options on the ETF, and that changes the structure of markets as well. What you've done, and it was always going to happen, is Bitcoin's now become financialized. When it wasn't really, it was still had purity to it. Now, it doesn't mean it's impure because of this, but you've allowed a financialization layer. And what that's going to mean is that they are going to offer leveraged products on it. Now, options are kind of defined risk products. But what you end up with is, in a very high volatility product, we get a lot of volatility sellers. And it dampens the market because they're always hedging. And that hedging structure can really change the nature of markets. Sometimes it creates acceleration points because everybody's short and suddenly the price goes through and everyone has to buy everything back. Other times, just by the ongoing selling of yield, selling of premium for yield, it slows down the whole market itself. So I do think that's a bigger deal than people expect. But the casino for options on ETFs is going to be quite amusing for a while as well. Because, if you think about how much the Robin Hood crowd use options on tech stocks, they're going to go wild on this stuff. And they've not been able to, For Americans, it was really hard. Deribit was not accessible to Americans. They're now going to start using options. I don't know when that launches, but it'll happen at some point. And that brings in all the market-making firms and the investment banks and all of these other financial players.
And now the big final is here, and Raoul Pal shows us his crystal ball, giving us a sneak peek into the future of the crypto cycle. Raoul breaks down what could happen, offering different scenarios. Will it be a normal cycle reaching $150,000, or could it happen faster? Raoul even talks about the chance of a bubble cycle, looking at history for clues. Follow on tight as Raoul gives a detailed analysis. suggesting a price range of $152,000 to $250,000. The journey isn't done, it's just changing. In a surprise twist, Raoul talks about Bitcoin getting more financial options through ETFs. It's a big deal, and the crypto world is about to go through a big change. If you have been watching so far, thank you from the heart, and do not forget to subscribe to Bitcoin Zella. The most important news will reach your inbox on a daily basis and for free. Not know why you haven't subscribed yet. If you enjoyed the video, hit the thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to help you on your money journey. Until next time, happy investing.